Okay, hello everyone. Welcome to our broadcast and thank you for joining us today. I can see a lot of people joining. I wonder where everyone is from. Maybe you can comment which region or country you guys are from. We'd love to hear from you. Nice to meet everyone. So, my name is Iris, and I will be your host for this session. So, actually, I am part of the TraderWagon team, which is a social trading platform that specializes in copy trading. And I will be sharing more about this later on as well. So, TraderWagon actually partnered with Binance in order to host this live session and to share with you and with everyone very interesting topics that we have prepared. And we hope that you guys will learn a lot from it and enjoy this session as well. So we also have a lucky draw with prizes to be won. So stay tuned, everyone. And we're very lucky to have a very special guest joining us today. So he's actually a professional market analyst and trader. You can also check out his Twitter bio at Lawai as well. Okay, so just to give everyone an outline or flow for our session before I introduce our guest speaker. Okay, so we will actually be moving on directly to our main topic, which is on counterintuitive technical analysis. So Jimmy will be sharing with us his knowledge and expertise on this topic. And after which, we will also be holding our first round of lucky draw. So we will be going through that. Next, we will go through our next topic, which is on copy trading. And finally, we will end with another round of lucky draw as well. Okay, so it's important to note that for our lucky draw, it will be distributed to TraderWagon accounts. So for those who do not have an existing TraderWagon account yet, all you have to do is log in to traderwagon.com and you will be able to access your TraderWagon UID already. Okay, so before we move, let's start and move on to our main topic. So I'm sure that some of us here have attended one or two maybe trading sessions in our trading courses in the past. So I personally have attended quite a few as well. So I'm very curious to see what else I'm missing out in these trading courses. So I'm very excited to welcome our very special guest, Jimmy. Hello, Jimmy. Thank you for joining us today. How are you?
Hello. Can you hear me?
Yes, it's very clear.
Great. Is the screen sharing yet, or am I just speaking now? Oh, there we go.
Sharing it now. Yes.
Yeah, I'm on the charts. I'm off the charts now. Yeah. And thank you, Iris, for hosting this session. Thank you, TraderWagon and Binance Futures. And I'm very happy today to talk to you guys about some of my theories. What they don't teach you in trading courses. Yeah. So maybe just a quick introduction of myself. What do you think, Iris? Should I do that?
Yes, I'm sure a lot of our viewers are very curious about our guest speaker.
So,
feel free to share a bit more about yourself.
Perfect. My name is Jimmy. You can follow me on Twitter at CryptosLaway. Most of my tweets are in Chinese because I'm half Chinese, half British. But I just happen to market myself towards mainly a Chinese audience. But I also do some English live streams like today. I'm a technical analyst and trader. I've been trading, if you count the early days, but I wasn't trading actual commodities or Bitcoin years ago. But I would say I started trading maybe 15 years ago. I look really young. Yeah, I am. I'm not super old. I'm in my late 20s. But I've been trading for 15 years. How come, right? Well, I'm sure some of you out there listening in Europe, in the US, in Canada, have played a game called RuneScape. So I used to play this game as a as a kid, as a teenager, and it's basically an MMORPG. I think it's still running now, but it's not so big now. It was one of the biggest games back starting from 2001. And in this game, there were markets and there were these in-game items. There were commodities in the game, and there was actually a grand exchange, like a place you could go to and buy and sell these items in bulk. So that's where I really learned about some basic ideas like supply and demand, and buy pressure, sell pressure, that kind of thing. So that's where I learned how I learned trading. So I progressed quite well in that game. I made it to max cash, which was 2.14 billion gold in the game, which amounted to about $20,000 if I sold it to US dollars. And this was when I was 13, 14, 15. And that really taught me a lot about trading because there were charts in that game too. You could go on a charting site like I am using now. I'm using TradingView. You could go to a charting site like TradingView to chart these in-game items, and that I think I've checked quite a few other traders on crypto Twitter have learned trading from this game. That's just a bit of a background story and a bit about my crypto journey. So I first knew about Bitcoin, I think it was 2012, when a friend of mine who was accepted to a prestigious university, who was studying computer science there, he told me about this magic internet money that could be mined using computers that solved mathematical equations. And I thought it was kind of a scam, so I didn't go down the rabbit hole so early. And I had other things to worry about, getting into university, things like that. So in my fourth year of university, actually it was my third year in university, a friend, an Italian friend of mine, told me about this new crypto called Ethereum. So I discovered Ethereum in mid 2016. Bought a bit, a few euros, but like Ethereum was really cheap back then. It was just 3 or 4 euros. I can't really remember. But the next time I really went all in crypto was in 2017. Early 2017, I basically went all in Ethereum because there weren't many coins to trade back then. I went all in Ethereum at $12. And I basically held half of the way, sold, and then it doubled overnight, lost half my coins. I bought back, lost half my coins holdings. And then I realized, gosh, I really need to learn how to trade these markets. I can't just sell and buy back less coins. It felt really bad. So I looked I looked for online sources. I looked at other people on Twitter. In this day and age, we have so many great resources out there. Binance Academy, right? It's a great resource. Investopedia, Baby Pips. What else? ThepatternSite.com. These are all great sites for learning about trading. But what these sites don't mention, and you can follow other traders who teach technical analysis, but these are all really basic things. Like they teach you how to draw trend lines. Trend lines are easy, right? Everyone knows how to draw trend lines. You can draw a trend line like this and you say, oh, it broke down, but why is it going up again? Like it doesn't really tell you much. There are these basic things that they tell you, but they don't mention when to use these things, when it is most effective to use these things, because markets are very different in crypto than in equities. They're very different from commodities. They're very different from FX. So crypto it's one of the only markets out there that you can go full technical analysis on, because it's not really affected by, like the things that affect equity markets, or it's not really affected by the policies of countries, because it's more decentralized. But obviously, when there's a lot of volatility in the market, there are things that they kind of lock into place, and there's a high amount of correlation. So crypto markets are a really great place to start if you like technical analysis, like looking at charts. You can trade the crypto markets, at least Bitcoin and Ethereum, solely off looking on charts. You don't really need to read the news. You don't really need to do anything else like that. But you need to know the market psychology. So let's talk about some. So that's basically my introduction. I got into crypto 2016. 2017 went all in, and I traded Bitcoin, Ethereum, a lot of altcoins. I survived a whole bull run. Obviously, I prospered in the bull run, but I also survived the bear market, not meaning I didn't lose any money. I lost plenty of money in the bear market, but I definitely learned a lot, and I didn't leave crypto for good. So that's what kept me here. And a bit about myself. I do a lot of spot trading. I do mainly spot trading, but since we're talking about copy trading and Binance futures, I also do futures trading, but I only short the markets. I always buy spot when we're going up, and I short the markets with perpetual swaps when we're going down. And I never use over 1x leverage. So I'm relatively low risk. I don't have a high risk tolerance. So that's basically a bit about myself. Okay, so let's get right into our main topic today. And it's divided into two main parts. Okay, so I'm going to first talk about how there are some counterintuitive ways of looking at markets when it comes to basic principles. So, and the next part we're going to talk about is counterintuitive technical analysis, like actual things on the chart that prove what I'm saying is kind of true. Okay, so before we say anything, obviously, none of this is financial advice. I've not had any professional training in a hedge fund. I'm just a individual trader that has made a small fortune off my own ideas. And so that set aside, not financial advice. Let's get right into it. So I have some basic trading principles for when we trade crypto markets. So first of all, I'd say it's a triangle. It's a triangle. By triangle, I mean there are three things that we need to consider when trading in crypto markets. And the first thing is psychology. And psychology is basically the markets are definitely a very psychological space, right? You're trading against other people, right? Especially in bear markets, when there's no new money flowing in, there's no new blood flowing in. If you make money in the bear markets, that means you're basically taking money from another person who's losing money. It's a different case in bull markets because there's just tons of capital flowing in, and the whole market is expanding. So everyone's kind of making money. But the bear markets are much more brutal. So I'd say psychology is a huge part of especially bear markets. And that's mainly market psychology. So when we're going down, people get scared. When we're going up, people get greedy. And there are other traits like when we go up, people think the markets aren't risky, right? Like when prices are high, they're like, oh, this looks good. But when prices are dropping, they feel it's risky. So that's kind of counterintuitive. Okay, so that's the first thing. The second thing we need to mention is action. So action, yeah. So we have psychology, action, and then what's the next one? Okay, price. The third one is price. So what is price? Price is basically what one person is willing to pay for something at a given time, right? So psychology, this is like a triangle of how markets work. Action, if people buy in, a lot of people buy in, it causes the price to rise, right? And if the price rises, it gives a positive psychological response in a person, right? People are happy. They get greedy. They feel as though they're making a lot of money. They don't want to take profits. They want to let their profits go on. That's psychology. And then psychology affects your actions, right? So, for example, the price goes up, you feel happy, you feel greedy, you don't sell, but someone else sells, right? There's a big whale holding 10,000 Bitcoins. They are out of this loop. So if you're in this loop, you're a normal human. You're a normal market participant. So if you are in a bear market and if you want to make money, you need to break this thought loop, okay? Because this thought loop, everyone's in the same thought loop. So I would call this, I heard this in another podcast, and they called it human OS 1.0. So that's basically, we're all human, right? We're all human, and we all run the same software. We get scared when things are bad. We get greedy when things are good. That's just human nature. But if everyone's doing the same thing, you can't really make money off the markets, because if everyone's doing the same thing, like, it just goes in a circle. It just goes in a cycle, and nothing really happens. But if you want to extract wealth from the markets, you have to come out of this loop. Okay, so that's the first thing I'm talking about, is this thought loop. And then I'd like to say that this is basically price action, right? Market psychology, deciding what the price is, and the price determines the market psychology. Market psychology determines people's actions. People's actions determine price. Okay, so it's an ongoing cycle. It happens all the time, every day. And this I would call it the price psychology loop, right? So something counterintuitive you need to think about is, I believe I've heard other people say this too. Especially in crypto, price isn't a product of narrative. Meaning, like, if let's talk about a narrative, right? The upgrading of Ethereum to Ethereum 2.0, the merge, right? If we're talking about the merge, if the price rises, we use this narrative and we put it into this, make it the reason for the price rising. So if the price rises, we think, oh, that's because the Ethereum merge is coming. But if the price is dropping, we'll say, oh, that's because the Ethereum merge is coming, and when the beacon chain and main chain merge, people are going to get their Ethereum back and they can sell, right? Because right now, locking your Ethereum in the beacon chain is a one-way ticket. So that's a good example of, like, most narratives are two-sided stories. There could be a bullish side, there could be a bearish side. So if we see the price goes up, we attribute the bullish side of that news event, that thing that's happening, to the price action. And if the price goes down, we attribute the negative stuff to what the price is doing. So this is a great example of how price determines the narrative. Right? Price, actually, the narrative follows the price. So if the price goes up, people attribute all the good news. People look for reasons because they don't want to believe that these things can just be predicted on a chart, but they actually can. Usually, some kind of price rise starts from a technical factor, meaning on a chart, something looks good, a trend starts to form, and then the trend follows some technical indicators, like the moving average, like a trend line, and you can use these tools to look for when this trend ends, right? But a lot of people, well, it's kind of a good thing, because if everyone believes that you can just use technical analysis, then it wouldn't work as well. It's only, I'd say, most, especially in futures trading, it's possible that only 10% of people can make money long term. And this 10% of people are extremely profitable. Okay, so these are some basic principles. And then I'd say a narrative forms around this. So the circle I just drew here is the narrative. So the narrative forms around this triangle of thought, when action determines price, and then the price determines psychology, market psychology determines action. And then people attribute a narrative to this triangle. Okay, so a good example of this is I actually predicted this big drop. I didn't have my Twitter back then, so I can't really show you proof. But I was on a different platform back then, which I was banned from, because China keeps on banning crypto-related stuff. So I switched to Twitter. But I actually predicted this drop. But obviously, you can't predict massive events like that. It's called a black swan, right? Yeah, I bet a lot of you are doubting me, like, Jimmy, is this really true? How can price always follow? No, how can narratives always follow price? Obviously, sometimes a news event triggers a large sell-off or a large green candle, right? A large rally, for sure. But these are called black swans or white swans. So black swans are when are basically unpredictable events that cause a dramatic price dump in the markets, right? That the one characteristic is unpredictable, so you can't really know if it happens, so you can't really prepare for it. So that's a black swan. And a white swan is something you can't really prepare for, that causes prices to go up a lot very quickly. So I would call these catalysts in the market. They don't really determine the trend, but they definitely cause a short-term speed up of market events. So this is just me going on about my prediction before. There was this downward channel here. There was this parallel channel here, and at this price point here, it was 6,700. For those following me for more than a couple of years, they would know I predicted the markets would go from 6,700 to 10,500 and then drop to 4,000. I was pretty close. Oh, it was 4,200, my prediction was. So I predicted that. I predicted 2 moves in advance. But how could I do this, right? How could I do this? This is all technicals. I didn't predict COVID would happen. Although COVID was brewing in, was it late? I think it was November, right? It was brewing in Wuhan in late November. But we didn't really think it was a thing. And at that time, prices actually went up. Prices actually went up all the way to February. And then things around the world started looking bad. Different countries started getting infections. And then the price started tumbling down. But it was all pretty normal until the March 12th candle. And that was from, what was it, 8,000 dropping down all the way down to like 4,000. So that was a huge drop. But I did predict that we would go to 4,000, just not that fast. I thought we would drop to maybe 7,000, bounce around a bit, and then drop to 4,000. That's just from my technical analysis. But we ended up dropping really quickly from 10,000 all the way down to 3,800. So basically, the black swan of COVID sped up that drop, that technical drop. It was going to happen anyway, but it was going to happen slower, not so fast. So usually these black swans do affect the prices, but they don't change the trend. They don't change the trend. So that really sped things up and caused the prices to go back up. And some other counterintuitive things. Back here, when was it? 2017, September 2017, Bitcoin dropped from, what was it? From 5,000 all the way down to 3,000. What was it? Yeah. September. Yeah. So that was the September drop. So for those of you who were in the markets back then, that drop was a huge drop. It was from basically almost a 50% drop, but it was very quick. That was the scary part. It was just a few days. And the reason for that drop was China banning ICOs because China banned ICOs and exchanges in China. So all of the exchanges had to move overseas, and there was a lot of mayhem in the markets. Lots of Chinese-related coins going down a lot. Some of them just running off. And yeah, a lot of rug pulls then. So there was a lot of fear in the markets, but it didn't stop the trend, right? You would imagine like such a big country with so much Bitcoin hash power, with so much Bitcoin trading volume. Most of the Bitcoin trading volume back in 2017 was out of China, right? It was something like 50 to 60%. You'd think that would really affect the markets, but it just dropped 40%, and it went from 3,000 all the way to 20,000, and that was a huge rise, right? A huge rise, a 560% rise from since they banned it. And then like Bitcoin started to drop for no particular reason, and people attributed the drop to the ban of IEOs and like the price going up too fast. It went from, what was it? It doubled in a week. Was it 10,000 to 20,000? It just took 1 week, and then prices started to tumble. So there wasn't really a big reason for this slow grind down or this drop. There wasn't much of a narrative. So Bitcoin can just go down for technical reasons. You don't need to look for external reasons all the time. If you jump out of this thought loop of thinking narrative determines price, you'll do a lot better in these markets, because there may come a time when equities go up. Stocks might go up to new highs. Who knows? The US may give another stimulus check. Who knows? These things, they could pump. But Bitcoin is in a technical bear market, and it could go down by itself. Ethereum could go down by itself. And it could remain relatively independent of other markets. And just remember this. Okay, so Bitcoin only follows stocks, only follows gold, only follows other things when it is convenient, right? So this means, like, if it follows gold and stocks at places where it needs to drop to liquidate longs, then it will. But it doesn't do anything unwillingly, okay? Unless there's a huge like global meltdown. So that's possibly our first part. And maybe Iris, we could get some questions from the chat. Yeah. And we'll
Yes,
continue
sure.
with the second part in a minute.
Yes, thank you for sharing. This is actually very informative to our viewers. And actually, I wanted to ask, right, because you mentioned that a lot of it is also related to psychology. However, for a lot of traders, it's not very easy to change your psychology, especially if it's already something that you're kind of used
It's definitely very hard. It's very hard to change.
Yes.
You
So
just
I
have
guess
to reprogram yourself.
Okay, that's true. Maybe just need to reprogram yourself. Maybe do you have any other tips or advice on maybe how emotional traders, or how we can change our psychology for better?
I'd say if you're staring at charts a lot, like you're literally watching every tick, every second, every minute of the markets, it's not very good, because you end up you get it's too immersive, because the markets, the charts, you see green candle goes up, number goes up, number goes down. These things are very emotional, right? You get trapped in the moment. So I'd say one of the best advice given to me by my teacher was that you shouldn't stare at the charts all the time. You should be slow. Slow is fast. Okay, slow is steady. Steady is fast. So if you I'd say if you're a novice trader, never go above 2x leverage. Okay, if you have more capital, never go above 1x leverage. I know that may be bad for trading fees for exchanges, but that's true. Like, if you want to survive, if you want to keep on betting, you shouldn't lose all your capital. If you go above 5x, just a 20% move in crypto markets, that's so common, right? 20% move could get you liquidated. So I would say for really novice traders, stay off the leverage. And if you're starting to get good at it, maybe just 2x leverage at most. So that really helps to dial down the emotions, because if you're trading at 5x leverage, 10x leverage, you're experiencing those emotions with much greater intensity, 10 times the intensity. So that can be a dangerous thing. And some tips and tricks. Okay, so if I feel some FOMO, like I really need to be in a long position or a short position right now, like sometimes you'd feel, oh, if I'm not in a position, if I'm not longing or shorting, I'm wasting my time. But that's not true. Like, if you have no position is also a position. You're in the position of just waiting for the opportunity to come to you, instead of chasing endless opportunities happening all the time, then they might not be profitable opportunities. They may be a bit tricky to take. So I'd say to counter the FOMO, you could just go for a run. Yeah. So if you're really FOMOing, just go out for a 3-mile run, a 5-mile run. Once you come back, you can get your blood flowing, right? You can get out of the psychological sphere of the markets and really get out there, breathe some fresh air, have a drink of water, go out. Why for a run? Because you're out for at least half an hour or even an hour. And when you come back, the markets may have changed a bit, but also your emotions have cooled down a lot. So I'd say go out for a run too. And you may ask, which time frame do I trade on? So if I'm trading the short term, I usually look at the 8-hour chart. Why? Because there are 3 8 hours in 24 hours, right? And they correspond with the Asia Open. So when Asians wake up, the US Open, and the Europe Open. So it's when these 3 continents essentially wake up and see what the markets are doing, and when they take action. So there's a lot of action on the 8-hour chart. So on the 8-hour chart, you can choose to look at the charts just 3 times a day. Just set a timer on your phone and just look at the charts once every 8 hours to see how the markets are doing. You don't need to stare at the chart all the time. So yeah, that's the answer I would give.
Thank you for sharing, Jimmy. FOMO really is a dangerous thing, especially
FOMO is dangerous.
for emotional traders. So
Yeah.
definitely, I have been burned a few times due to FOMO. So yeah, that's a really helpful advice. So we also received quite a few viewers who also asked if you have any preferred ratio for risk versus reward or risk versus return.
Oh, for sure. Yeah. So I always trade. Um, I only look at that when I'm doing short-term trades, right? Not when I'm doing long-term trades. So long-term, like trend trend-based trading, I uh, I don't calculate that because I don't need to. It doesn't need to be that precise because I'm not a high frequency trader. So it really depends on like what I'm feeling in the markets. And my trading style is more prediction based. So I forecast the markets, like what the markets will do in the next few months. And I actually draw lines like this. Some of you may laugh at me. Why would you can't forecast the markets? That's true. You can't 100% forecast the markets, but sometimes you can get a gist of how things are going. And for example, I predicted that we will go. You can check this all on my Twitter. It's all proven. So I predicted that the prices will go from 38K to 48K and then drop from 48K to 27K. I predicted these 2 moves. And my reason was uh, for a lot of people to get uh, a lot of FOMO, we need to break this level right here. So if we break this level, people will think, oh, we've broken um, a major resistance and we're going to 50K. And 48K is an interesting number because we're so close to 50K, right? If you get really close to a major threshold, people get a lot of FOMO, like we're breaking 50K. And 50K is another psychological level because if you break 50K, you're closer to 100K than you're to zero, right? So you're like halfway there to 100K. So that's a really psychological level. So that area there is where a lot of whales would choose to unload their Bitcoin on the markets when retail traders are FOMOing. So that was my reasoning why we had to pump to 48K for prices to start going down. So that's a bit of counterintuitive trading, because usually if you find a resistance, right, you short the market right below the resistance when you're getting up to the resistance. But I usually wait until the markets like poke through the price to poke through the resistance and stabilize on top of the resistance. And I choose to short the markets when things are looking good. So this is my way of trading in the bear markets. Like I believe most moves in bear markets are to trap people in a bad position. But in a bull markets don't really lie. They just keep going up and occasionally drop. All you need to do is buy the dip, right? But bear markets are a lot more tricky because it's more of traders versus traders. So back to the viewer's question. What kind of risk reward ratio am I usually looking at? Well, if it's a trend based trade, I took this trade actually on Ethereum. I didn't short Bitcoin. I need to go through another Ethereum chart. All right, so I didn't short Bitcoin, but I shorted Ethereum, and I shorted it at 3,350, so here, and my stop loss was 3,700, or I think it was 3,650. So that was my stop loss. Let's see. And my take profit was 1,700. But the USDT charts didn't go down that far because of the recent UST stuff and some fear in the USDT markets. So I manually closed my position at 1,800. So that risk reward ratio there is 5. So I usually take positions with a risk reward ratio of a 3+. So this, if you only take trades with a risk reward ratio of 3 or above, that means you can be wrong. If you take 3 trades, you can be wrong twice, right? And you can still be in profit. You can still break even. But obviously, if your risk reward ratios are greater, you can be wrong more often and still make money. But usually, this is why I like to predict markets, because you can't just take trades anywhere on the charts. Because if you choose to like long the markets here, right? Although you have, sorry, I need to go back to longing. If you long the markets right here at where this trend line is, and you have a stop loss of, let's say, 5% or 2%, right? And then you make the risk reward ratio, you expect it to bounce back to like these levels here. Then the risk reward ratio is something like 4 or 5. That's also very good risk reward ratio wise, but the markets are really going down, and you can see how the price action is really like winding down. So if you don't predict the markets, then you're just taking trades anywhere you like. You really need to have a high risk reward ratio. But if you have a good sense of where the markets might take where the markets might reverse, where the markets might drop to, if you predict the markets, that really gives you an edge, and you don't really need to take any trades in between. So I do look at risk reward ratios, but it's more of a thing. I don't usually pull out this tool to measure it. It's more of oh, this is a good place. This is a very good place to short the markets. So I have it in my mind, and I'd say 1,700 is a great place to long the markets for various reasons. So my predictions are a tool to help me choose what trades I take where and when to like completely stay out. So I don't predict the markets just to trade. It's a tool of helping me choose my trades. Yes.
Okay, thank you for sharing, Jimmy. Actually, now our viewers have quite a bit of questions, but I think maybe we can compile some of them first and proceed with the second part. Okay?
Sure. Okay.
Is that okay?
Yeah. Okay, let's get to the second part. So I'd say most counterintuitive trading happens in bear markets. Bull markets are really easy. I don't know if there's this saying in English, but there's a saying in Chinese. It roughly translates as when the tide goes back, you know who's swimming naked, right? So it applied to markets, the meaning is like when the bull market is happening, it seems like everyone's a genius, right? Everyone's making money as long as you just buy in and hold and just buy every dip and never sell. You're just making money constantly. But in a bear market, that's a real test of trading, of decision making, of market psychology. So I'd say there's not a lot of counterintuitive stuff in bull markets, except for like in a bull market, if there's bad news, that's good, right? If there's bad news, like China banned something, that's really bad news. But um, over the past few years, every time China bans Bitcoin, the price goes up. So September the 4th, 2017, China banned ICOs. Prices went from 3,000 to 20,000. Why? Because the trend was up, and China banning all of this crypto related stuff caused a lot of people to sell, and a lot of pressure was relieved from the markets. So that would be my take on why the price went like that. But it's kind of counterintuitive, right? You'd think that if such a huge event happened, it would cause the bull market to end, but it didn't. And then there was the what was this? May 2021 when China banned. Oh, what's this? When China banned Bitcoin mining. That was a big deal. That was a huge deal. So that caused the prices to drop. But since then, let's see, how much of a rise was that? That was from 1,700 all the way to almost 5,000, 4,800. So that was a 180% rise. That's almost 3x. So that's kind of counterintuitive, right? China banning mining, that's a huge deal. 70% of Bitcoin hash power, Ethereum hash power was in China, and it disappeared overnight. And a lot of people didn't believe they would really ban it, but they did. And since then, obviously, we've seen hash rates recover. But that was a really scary time, and people believed that that would cause the bull market to be over. But we went to a new high. So explain that, right? That's kind of counterintuitive. And some other things on the chart, if you're looking at technical analysis, this is what we call a descending triangle. So this chart pattern, if you look it up on Investopedia, if you look it up on Google, they tell you that this chart pattern is a bearish chart pattern. Prices usually take a tumble, and the drop is usually equal to like how high the triangle is. So if you move that all the way down here, I'd say if it dropped through there, it would go down to like 900. But it didn't. Why didn't it? That's really counterintuitive, because this chart pattern is just really, really ugly. But I still predicted that we would go up because of the reasons I just mentioned. Every time China bans something, the prices go up because a lot of people have panic sold, and a lot of pressure in the markets that was building up, a lot of sell pressure has been relieved. So it kind of speeds up the process of the correction. And instead of dropping further, it just goes back up. So you really need to take into account what kind of situation we're in. Like if China didn't ban Bitcoin mining, and it formed this kind of chart pattern, maybe then I'd be kind of worried. But due to those circumstances, Ethereum had this really ugly triangle. I still bought here, and I believe that we would go up because you also need to have a look at the market psychology by following a bunch of people's Twitters. If everyone's bearish, then the bearish side is just too crowded. It's a really crowded trade. If everyone's shorting the markets, there's just a lot of liquidity on the way up. So the markets always choose which way, the path of least resistance, right? Water goes downhill. Markets choose wherever there's the most liquidity, wherever you could cause the most pain. So that's max pain, right? So the max pain for people who sold, a lot of people sold here. So that's why we went up. That would be max pain, because lots of people sold and they got FOMO around here. And then we experienced some more pain, and that was, what was that? Exchanges banning Chinese users, right? A bunch of exchanges did this around here, and since then prices went from 2,800 to 4,800, and if we're talking about Bitcoin, that's 40K to 69K. So that's really counterintuitive. Like exchanges banning Chinese users, that's a bunch of like their customer base gone, right? But it happens that they didn't really, some of them outright banned them, but some exchanges just turned a blind eye. But still, the prices went up all the way to like November, right? And then prices start to go down. We didn't really know the reason, and then it really took a tumble. And then we attributed the tumble to some external factors like the equities markets, right? And then the next tumble, we blamed Russia for attacking Ukraine. But right on the day they attacked Ukraine, there was a spike low, and then we went back up. So I don't know if you remember this. But this was all predictable just from technical analysis, because we formed a trend line here. We formed a trend line here, and there was definitely quite a lot of pressure here. And we predicted that the markets would take a downturn from here. And that wasn't, I didn't predict Russia would attack Ukraine, right? How can you predict that? A lot of people thought, oh, they're just bluffing. They're not going to attack, right? But still, the markets went down. And just as the news was released, it went down a lot, and then it started bouncing. And then this rise here, I didn't follow any of the lunar news, right? Do Kwon buying a ton of Bitcoin for the LFG, the Lunar Foundation Guard, I think that's what it's called, buying tons of Bitcoin. So people obviously attributed this rise to a bunch of people especially the Luna Foundation, buying a ton of Bitcoin. So that was definitely a factor. But from 3,000, was it? Okay, so I think we should go back to Bitcoin. But actually, the Bitcoin charts and the Ethereum charts are pretty much the same, so we can stick to Ethereum. If we're talking about Bitcoin, it was 38K to 48K. So that rise is also evident on the Ethereum chart. And I predicted that because we're in an ABC correction. So this is kind of geeky, some geeky TA stuff. Correction waves are basically when the markets make a detour off its main route. So the main route is down right now. The main trend is down, and any upward move is considered a correction. Okay. So in a downtrend, corrections are going up. So some people think, oh, corrections mean a drop in price, but actually it's not. Corrections are a neutral term. A correction is just a counter trend move against the trend, something against the trend. So most corrections, in my experience, consist of three distinctive moves. So there's usually one. So if it's on a downtrend, we usually see the price go down, and then the price bounces a bit, and then it drops a little bit, and then it bounces again. So that's the three-wave move. So this is what we experienced here. The prices dropped to 2,100, bounced to 3,200. That's wave A. Wave B was 3,200 to 2,300. 2,300 to 3,500. That was wave C. How did I actually didn't predict 3,500, but I did predict 48K in Bitcoin as the previous top for the reasons I just mentioned 10 minutes ago. So if prices go above this level, a lot of people are going to FOMO in, and that's a great place for big players in the markets, whales, to unload their Bitcoin because they need liquidity, right? They can't just market sell. They'll cause the price to slip too much. They need to sell when other people want to buy. So they need to sell into the demand zone. So there's always supply and demand. So sometimes you see chartists on crypto Twitter. Any price level that's low, they call it like demand, right? They just write demand. Sorry, my squiggles. So they draw a box here and they write demand, right? There's always demand somewhere. It's just who demands what, right? So up here, there's a ton of demand for when Bitcoin or Ethereum pumps through this price level. Because if you pump through this price level, a bunch of retail traders FOMO in and they demand more Bitcoin. They want to buy Bitcoin. There's a lot of demand there. So it's just demand from a different crowd, right? So there's always supply and demand. So it makes me laugh when I see crypto Twitter traders and analysts, like they draw like a price drop and then there's a box and they write demand, right? But demand is always there. There's demand up here, there's demand down there. It's just different people demanding it, right? And there's supply up here too, right? Supply from the whales, and demand. The demand here is from retail traders. So this is how you wanna view the markets. There's always a constant supply and demand, especially when prices are high and when prices are relatively low. So those points, there's a lot of liquidity. There's a lot of trading going on. And in the middle, that's just glue. That's just the glue where the price goes from a high point to a low point. But there's a ton of demand when prices are relatively high or relatively low. But there's the supply and demand. Okay, so when prices are high, it's usually retail traders wanting to buy in because of some of the reasons I mentioned before. They have a different perspective on risk. And I mentioned that psychological loop, human OS 1.0. People running human OS 1.0 think that if we pump through a price level, you buy. That's what they teach you in trading courses, right? That's called a breakout trading. If you break out a level, you buy, and then you set a stop loss right below the level. But that's no good, because we're bound to drop below that level if you know what the markets are capable of doing and what market dynamics are. It's taking the retail traders' money and putting it in the pockets of bigger traders, smart money. So that's just the nature of markets. What I'd say is in bear markets, you really need to have an edge against the other traders, and you really need to think in a different way, because a lot of the time, things like this change a lot too. Okay, so I'll give a great example of this. People's views on what to do when. Okay, so if we go to the weekly chart of Bitcoin, for those of you who entered the markets in 2017, you would remember this. I remember this really clearly. So let's expand this chart a bit. So in 2017, we had some interesting price action here where the market just went sideways, and there was this floor forming, right? There was this floor, this line down here, this price floor of 6K. So people didn't believe we'd ever drop below 6K, because every time we went near 6K, we bounced. But since we dropped through that, that kind of gave people the idea that if we tap a support multiple times, many times, it's going to eventually break. And it's a positive feedback loop, right? That this huge event of us going down to 6K and then bouncing every time we reach 6K for how long was that? January all the way to November. So that was 10 months of just bouncing 1, 2, 3, 4, 5, 6, 7 times at 6K, right? Every time it was really easy to trade, right? Every time you drop to 6K Bitcoin, you just buy. Every time you bounce, you sell. And people thought that we would just form a price floor here, and then the price would go up. So that's what most people thought. But in fact, we dropped through. So that kind of changed people's perspective. And it was further reinforced. So after that event, people believe that if you tap a support level too many times, it's going to break. And it works the opposite way too. So we dropped to 3K, and we formed this price ceiling here, right? This level here that we went up once, twice, 3 times, 4 times, and then on the 5th time we broke through. So people believe that, oh, okay, so if we tap a resistance level more than 3 times, we're going to break through. And then it was further reinforced by this level here. A lot of people here still believe that we would just go up, form a price floor here and go up. I did predict that we would go down. But as we dropped down, a lot of people it's like the 3rd time, this idea of if we touch a level more than 3 times, we'd break through it. and that was the third time, right? And then since then, this phenomenon doesn't really show on the charts anymore. Every time we test a level multiple times now, we don't break through it. I think that is because through these three experiences, a ton of people have had it ingrained in their mind that if you tap a resistance or a support level multiple times, you just have to break through it. But then, for example, over here, we formed a price floor, but this is a diagonal line. And a lot of people believe that lots of people in 2020 would remember this candle when Bitcoin dropped quite a bit, but like DeFi coins, decentralized finance coins, completely puked. Okay, it went down 90% in a week, and people thought that would be the end of the bull market. But we still didn't break through that level, and we went up. So that's the first example of not breaking through a level after multiple retests. So we had many retests here, at least 4 retests, and we didn't break through it. Another example is if we go down to the 3-day chart. I did show you the Ethereum chart of that ugly triangle, right? So here, it was a similar kind of deal. People identified this as a support, and we tested it 1, 2, 3 times. Actually 4 times if we count the previous test. So people believe that, hey, look, this is a really ugly chart. I remember people saying this is very, very similar to right before the big COVID drop. Remember this? They drew this chart and compared it to this over here, the pump to 10,500 and the drop to 3,800. It looked really similar, right? It looked really similar, but everyone thought that would happen, and everyone thought that, hey, look, we tapped this support so many times, we're gonna break it, but we didn't. We didn't break it. Why? I would say because China banned Bitcoin mining, and that relieved the pressure. And second reason is counterintuitive trading, right? If everyone's looking at this and comparing it to February and March 2020, then it's not going to take that path. It's not going to take the same path. And yeah, for sure, we went up. And since then, it's the next counterintuitive bit would be this this correction wave here. Obviously, I'm drawing it like this because it's already happened, these 2 lines. But most people viewing the chart here, I remember most people drew it as a horizontal line here. I think we should go to the daily chart. As a horizontal line here. So usually in a normal trading course, they would tell you, okay, horizontal lines are usually more reliable than diagonal lines. That's the first thing they tell you, which is not true. Diagonal lines work just as well as horizontal lines. There are tons of diagonal lines I can draw on this chart that work really well. For example, this diagonal line, right? We broke through it and then we retested it. That's really, really useful, right? So diagonal lines are very useful too. So I wouldn't take any particular theory as the absolute truth. You should always question these theories. You should never stick to one theory. There's like Elliott wave theory, right? Using corrections, waves, ABC as something from Elliott wave theory. But I don't use the other Elliott waves. I only use ABC corrections because these corrections work really well in the crypto markets. Why? I don't know. But just over my 5 years of crypto trading, when we go down, every correction wave up is usually an ABC, is usually a 3-wave setup. So this is just experience talking. But the counterintuitive part here is most people would long the markets here, but I chose to short the market just after we broke through. Okay, because the theory is you have to trap many retail traders on this move up. And what was the other thing? Over here, people believe that we would possibly bounce here, but we broke through. But obviously this is more obvious because we've already faked out of this area here. We broke through and we're breaking down. Obviously that was a trap. So if you realize that was a trap later on, you'd be fine. But if you still thought, oh, well, here we could see another bounce, and then we're going to form this channel going up here, then you'd be in a bad way. So predictions for me are just a guide, but trading in bear markets, I generally choose to take the path less taken, because if there's only a certain amount of money in a bear market, right? There's no new blood coming in. So if you're on the side with more people but with less money, you're going to get eaten. So this is how like huge Bitcoin whales can manipulate the markets, because retail traders, there's more of them. There may be 10,000 strong, right? Like an army of 10,000 retail traders, but the amount of money they have isn't as great as VCs, isn't as great as huge whales, huge individual whales who have 10,000 plus Bitcoins. So there are less of them, but they can make bigger waves. So this is why some indicators don't really work well. There are some indicators on some apps saying like the number of traders taking short positions versus long positions. So if we see like there are a lot of people shorting the markets, a lot of people longing the markets, it doesn't mean prices are going up. It just means loads of retail traders are longing the markets. So that's another indicator you should be looking at. And also, obviously, check out Twitter, check out whatever social media you're looking at. Follow a diverse range of people and watch what they're doing. If everyone's just so bullish when prices are high, it's not a good sign. If everyone's super fearful, like just a few days ago, I remember people thinking we would go down from here. That just makes me more confident. A few reasons, a few technical reasons. Here we draw this line from what was it, January 21 all the way over here. Sorry, I think it's yeah, this is right. And we can see that it's proven support, right, in the past, but we've dropped to this price, we spiked through it, and then we've rebounded above it. So this is my reason for being bullish here. We spiked through it, causing a lot of fear in the markets. And also you need to consider that Luna and mainly Luna, yeah, Luna and UST fiasco really didn't cause, but it was a big factor in the markets hitting the floor for fear. So that really accelerated the bottoming effect. Luna, the fear in the markets caused by Luna. So we saw that bounce up, and then we've now climbed above this line. and we're really holding strong above it. And this price pump here looks pretty good to me, and I think we'll be seeing 35K Bitcoin soon. But obviously, I don't think it will happen overnight. I think it will happen sometime in June. None of this is financial advice, by the way. And just a few predictions before I end my part in the stream. I believe that we may go to 35K, and then from 35K, we may take another tumble into July and end up at around 23K. And that may be the short-term bottom. And after reaching a short-term bottom, I do believe that we're going to see a mid-term mini bull market where the markets really get everyone excited again, get everyone reinvested, and then we see a huge dump sometime next year. And that's usually how bear markets work. There's usually like an interim bull market to get people excited, especially when people haven't lost all their money yet. Because I reckon a lot of people have lost quite a bit of money on this downturn. Looking at some statistics, I think most people, if you've held, you've probably lost 60 or 70% of your holdings. But that isn't too bad, because if we go up, like, in crypto markets, if we go up 3x, you could make that back. So usually when people haven't lost all their money yet, markets take an uptick and get people excited, reinvested, re-leveraged into the markets. And then that's when the real flush happens. So I'd say retail traders, we've entered a bear market, a technical bear market. There's no way of avoiding it other than that if you know we're in a bear market, you know what to do in the next 2 years. And that is work hard, put in some of your savings into crypto, into some major coins that will still survive into the next bull market, and you'll make it all back. Never lose hope, guys. And I'm sure there's a lot of lead traders on TraderWagon to follow. I haven't personally officially opened my own account yet. I'm still working on it. But once I get some gains on that, once it gets some traction, you may be able to follow my trades. So good luck trading on Binance. Good luck trading the bear markets. Stay safe out there. And thank you, TraderWagon, for inviting me on today. And yeah, thank you, Iris.
Thank you so much, Jimmy.
Yeah.
Actually, that was quite a lot of information, and I'm sure that a lot of our viewers has learned quite a lot from this. So thank you so much for joining us. Maybe for sure we have received quite a bit of questions, and we will compile them so that maybe, I'm sure our viewers, am I correct? Are you guys interested in seeing Jimmy in another live session or another broadcast? So let us know in the comments. Or if you have any ideas on what topics you'd like him to discuss, any indicators you'd like him to focus on, because of course we couldn't discuss everything today as much as we'd like to. So feel free to let us know in the comments as well. So I guess to wrap it up, so since for beginners it's quite overwhelming, I would say personally for a beginner who's not very used to using technical analysis, maybe do you have any, let's say, 3 indicators you'd like to recommend as for beginners to start with?
Okay, so 3 tools.
Yes.
The first tool is obviously the software I'm using right now. It's called TradingView. I'm sure most people trading crypto, trading equities use this software. So it's a browser-based software. So you just go on, you don't need to download the software, although I've downloaded a version of it. You can just use it from your browser. Just search tradingview.com. You'll be able to find it, and it's free to use. But obviously, there are some pro features that you have to pay for. But the free version is okay for most people. And on Binance or on TraderWagon, when you're looking at the charts, you can also switch the charts to TradingView chart, and it has all of these tools here. So, sorry, yeah. Over here, there's the toolbar. So I don't know if you can see really clearly. There's the toolbar, and you can click, and there are these tools that you can use, and the tools all have names attached to them. So there's this fib retracement. I know that these can be a bit overwhelming, but my tip would be to, if you don't know what a tool is used for, just take that name and just put it into Google, and it will tell you what that tool does and how to use it. And it's usually quite simple. So three tools I like to use. I like to use Trendline. So this is my favorite tool here, Trendline. And that's just, you just draw a straight line. Okay, let me get rid of all of these things on the chart here. So let's see. So Trendline is a good one because you can draw a straight line that indicates a trend that is forming or formed. So from this trend line, we can see that obviously you need 2 points to form a trend line. The first point, the second point, and then you can officially use the line once it touches the third time, right? So this is a good example of a way of finding the support here. So you draw this line connecting the low points or high points of a chart. So another way would be drawing a line here. So that would indicate there is some, there will be some sell pressure from traders here. But it doesn't indicate that has to be the bottom, because it could be a lot of people looking at this trend line and they're ready to long the markets here. So the markets have to drop below the trend line to like make everyone scared, shake them out, and then we go up. So you need to watch out for that. Trend lines are not absolute support or resistance. Always remember the markets are out there to take your money, right? So if everyone thinks this support will hold, it will most definitely drop below that support to shake all of these people out before going up. So that's something to watch out for. So that's the first indicator I would like to introduce. The second one would be, I'd say, Fibonacci. So Fibonacci retracement is basically a set of numbers, and Fibonacci retracements were invented in the Renaissance by this Italian mathematician, and he discovered that there were these numbers that had something to do with each other. So there's it's basically the golden ratio. So 1.618, 0.618, that's the golden ratio. And it's just an interesting thing because you can find a high point of a trend, you find the low point of the trend, and you, for example, here, the high point is here, the low point is here. Sorry, I think this is the wrong way around. You put the number 1 at the high point at the start of the trend, or if the start of the trend is from a low point to a high point, then you put the number 1 at the low point. Anyway, 1 is for the start of the trend. 0 is for the end of the trend, which is from 69K to 32K. And then you get all of these lines in between, and these lines are quite effective. You can find the what other traders are looking at, support and resistance. So you can see like some of these levels actually line up, right? Here, it lines up with the 0.5. This drop here, it lines up with the 0.236. This ABC correction, this support at, this resistance at 48K corresponds with the 0.382. So this is quite useful for identifying resistance levels once we've bounced. So like if we've gone down a lot and then you think we're bouncing, you can draw this Fibonacci retracement to find where we're going to bounce to, which resistances we'll face on our bounces. So that's another tool I'd recommend. And another indicator I like to use is this is a bit of a Jimmy secret. Not many people use these indicators, but you can look at USDT dominance. So if you look at, you can use this. It's not an official indicator, but it's a chart. It's USDT dominance, but most people talk about Bitcoin dominance, right? How much Bitcoin's market cap is in the total market cap, what percentage of it is. But there's also USDT dominance. So USDT dominance is a bit like the Dixie, like how strong the dollar is, right? But it's basically how strong stable coins are, how strong the biggest stable coin is in a bear market. That's very important because when there's a lot of capital leaving Bitcoin, leaving Ethereum, it goes to USDT mainly. So USDT dominance goes up. So to use this indicator, up here there's a plus icon by the ticker, and you can search USDT.D. And there are 3 buttons here, same price scale, things like that. I usually use new pane. And by doing that, you get this chart down here. And usually it's like the opposite of Bitcoin. So when USDT dominance is going up quite high, that means Bitcoin's price is low. If it's the dominance is quite low, that means Bitcoin's price is high. So it's a reverse indicator. And the way to use it, in my opinion, is if you can draw a trend line. You can draw a trend line on the dominance chart, a rough trend line, just a very rough trend line, and you could make a channel here. So every time we go to the top of this channel, it's a good time to buy Bitcoin. So here, we're at the top of the channel. That indicates the price to be 10,000. And sure enough, the price of Bitcoin went from 10,000 to 60K, 6x. And USDT dominance went down to this quite a low point, like 2%. 2% is quite low for USDT dominance. And then we see the prices go up again, and that corresponds with the top of the channel. And where was that? So the top of the channel was here. This is exactly where we talked about China banning Bitcoin mining. So this means the USDT dominance is high near the top of the channel. That means this is probably a bottom. So this is a great indicator for calling tops and bottoms. And you see here, we're down back at the bottom of the channel. And then that corresponds with exactly the top, 69K. So this is an indicator that I've discovered. I don't know if I've discovered it. Maybe it's one of those things that like people discover it simultaneously around the world. But I definitely came up with this use case on my own, and it's a great way of calling tops and bottoms. So I think, yeah, that's my 3 tools that I use a lot. Yes.
Thank you so much, Jimmy, for sharing. I'm sure that as beginners, we will take this into consideration, and we have quite a lot more to learn. So thank you for sharing your knowledge and expertise with us, and we hope to see you again in our next live session.
Okay. Yeah. Thank you, Iris.
Okay.
And yeah,
Thank
see you in our next live session. Yeah.
Yes, that's right. See you, Jimmy. Thank you.
See you. Okay, bye-bye. See you.
Bye. Okay, everyone. So let's take a breather. So that was quite a lot of information and knowledge shared by Jimmy, our guest speaker. So let's take a breather first and have our first round of lucky draw. So the mechanics are actually quite simple. All you have to do is join TraderWagon's official Telegram group, which is at TraderWagon Official. After that, you can proceed to comment hashtag copy trade on TW plus your TraderWagon UID. So in the TG group as well. So for example, you can type in hashtag copy trade on TW plus your TraderWagon UID. And in order for you to get your UID, if you don't have an account yet, feel free to log in to traderwagon.com and you will be able to access your UID. So for this lucky draw, we'll be giving away 10 USDT to 25 lucky winners. So feel free to send the comments in the TG group and we will be announcing the winners within 5 working days. Okay. Okay, so I guess we can proceed with our next topic. So for those who I saw in the comments already that there are some of you who are interested to know more about copy trading as well. So I will be providing a very quick introduction as well as how to copy trade effectively and in an efficient manner as well. So copy trading is actually usually associated with social trading, which is a larger form or a bigger, broader type of trading. And this type of trading has been popular quite recently, I would say, in the past few years. And it just means that it's a type of investing that allows users to observe the trading behavior of their peers and expert traders. So it's called social trading because if you will notice a lot of social trading platforms, you will see that it has a social media type of style wherein users can like, comment, or even share on any posts or any ideas available in the community. So this community allows users to share their ideas, their thoughts, and even their trading strategies. So copy trading actually takes it a bit further or one step further. So not only can you observe the ideas and trading strategies of other users, you can also copy their strategies, their techniques, and their actual trades. So it's actually very simple. So for example, if the trader that you are copying buys a coin, then automatically on your side as a copier, it will also open a buy position. And if the trader you are copying sells, then your portfolio will also sell. So it's actually quite simple. So copy trading, like any form of investment, has its own advantages. So the first one is that it provides easier access to trading and investment information and tools. So I know a lot of us are pretty much newbies or new to the investing and trading community. So it's actually pretty overwhelming to get started when it comes to trading. So copy trading allows you to join a community wherein you can learn more about different trading strategies. And if you are an expert trader, you can also share more information about your own trading strategies as well. The next one is that it provides you with more exposure to different investment markets. So with TraderWagon as an example, if you would like to have exposure in crypto futures specifically, then you can join the community and learn more about it. In addition to that, so copy trading also increases financial literacy in such a way that because you are learning more and more from the community you're part of, you may have a chance of reaching your financial goals better. So before, at least a long time ago, so trading and investing was not really common, especially to retail traders and to normal people like you and me, I would say. But because of the rising trend of, one of it would be copy trading, it allows users, simple users, normal users, to have a chance to invest in cryptocurrency through copy trading as well. So this copy trading may not be beneficial to all, but it can be beneficial to some users depending on what type you need. So the first one is that it provides you with investment exposure in crypto futures. So if you would like to trade or if you would like to invest in crypto futures, but you do not have the time or you do not have the knowledge to trade, then you can consider copy trading or copying other futures or other traders. So another is that maybe you're currently just starting to trade at the moment. So you can, if you would like to start trading, you can copy expert traders at the moment while taking the time to learn you learn how to trade on your own also. Okay, so copy trading also comes with risks for sure. So there is no investment strategy that works 100% or that will guarantee profits 100%. So definitely, even with copy trading for one, maybe you may not have trust in the trader you are copying. Depending on the copy trading platform that you are using, maybe you don't have as much control of your funds or your trades as you would like. So maybe you would like to set your own stop loss, you would like to determine your own leverage, and so on. So different copy trading platforms may have different types of features available. And I think the most important would be the risk of losing funds. So I'm sure that a lot of us are pretty much worried about this. So not copy trading does not guarantee profits for sure, definitely. So it will there's always risk of losing your funds like any other type of investment. And lastly would be copying the wrong type of trader for you. So just like what Jimmy said, that there is no one investment strategy or one indicator that fits everyone or that works for all types of market scenarios. It's also the same when it comes to copy trading. So even if the trader is highly profitable and has great performance, that trader may not be suitable for you because it may not meet your needs or risk appetite or even your investment goals. So those are just some of the reasons or risks that copy trading also has. So one example of a copy trading platform is TraderWagon. So we specialize in copy trading and we connect to Binance's API in order to allow our users to copy trade efficiently and effectively as well. So TraderWagon is actually also a Binance Futures approved broker partner. And you will be able to see TraderWagon on Binance Futures homepage or webpage as well as one of the approved broker partners. So how does TraderWagon's copy trading work? So it's actually very simple. So we have two types of users on the platform, which I'm sure you probably already know. So we have the lead traders, which are experienced traders. And what they do is that they create portfolios, then they trade futures, and then they manage these portfolios. So these portfolios now are available for the entire TraderWagon community to access and to copy as well. So copy traders can go through these different types of portfolios and copy the strategies that they would like. And in return, the lead trader gets additional benefits and incentives from being copied. So it goes without saying that whatever trading action the lead trader does is automatically replicated on the copy trader side as well. Okay, so with TraderWagon, I'm sure security is a very, very big issue for a lot of our users. So I've already seen in the comments some questions if it's safe to link your Binance account and if your funds are safe and all of that. So TraderWagon highly prioritizes and is committed to making sure that your funds and assets are safe with us. So we are able to do so by ensuring that your assets and funds are securely stored in Binance. So what that means is that we do not execute any on-chain transfers. So if you would like to test it out, you can do so. So if you try to, let's say, open a portfolio, you will notice that when your funds gets transferred from your Binance Spot wallet to your TraderWagon wallet, there is no external wallet address required of you. That's one. Number two, it does not require any deposit fees, and the transfer is also instantaneous. So what that means is that your funds technically has never left Binance and is securely stored in your Binance account. So on our end, it ensures that your funds does not there is no risk of losing your funds or risk of misplacing it whatsoever. Also, with copy trading, it's actually very important that the liquidity is there. so that all the trades executed by the lead trader is copied automatically by the copy trader. So our partnership with Binance enables this. So because of this, our users are able to share in Binance's stable and fast matching engine. We're able to share in their 100 billion daily trading volume, and with minimal latency as well. In addition, so because we know that that trading in general is overwhelming, we want to make sure that the platform is as user friendly as possible. So if you would like to try it out, you can go to TraderWagon.com. You will notice that it's not as overwhelming, I would say, for beginners. But at the same time, we're also able to provide advanced functions for our experienced traders as well, in order for them to execute different types of trading strategies. Okay, so if you would like, we're very much open to feedback, because TraderWagon has come a long way. We are looking to hear what types of features you would like to add, or what you would like to be available in a copy trading platform. So feel free to let us know. The last is that we believe that all of the information, especially of our lead traders, should be transparent. So we do not hide any of our lead traders' statistical performance, past performance. If they had a bad month, or if their portfolio is in the red, they're losing money. So all of our users are able to see that transparently as well. So this ensures that our users or our copiers are able to make the best decision in terms of which traders they are supposed to copy. Okay, so now let's proceed on how do you actually copy trade on TraderWagon. So we'll go through this step by step, and it's actually quite simple. So recently, I'm not sure if you guys noticed, so we launched our mini program on Binance Marketplace. So our users, so all of the Binance users, can now access TraderWagon through Binance's marketplace, and it's actually very simple. So all you have to do is drag down your Binance homepage and the mobile app, and select TraderWagon. And after that, you'll be able to browse and find different types of portfolios that you would like to invest in. So if it's your first time to log in to TraderWagon, then you just need to sign up using your Binance account and set up your TraderWagon account. And then after that, you're pretty much good to go. So you can make your investment, manage it as well, and then check your different types of transactions in your wallet. So aside from that, so just like what I mentioned, all of the portfolio details are available for you to see, and you're also able to check your historical portfolios that you previously copied, and the portfolios that you are currently copying as well. So it's actually quite simple also. So, and to celebrate the launch of our mini program, we're actually having an ongoing campaign that I'd like you guys to join if you're interested. So because of this launch, we are giving away, or we're having a lucky draw of 3,000 USDT. And this basically, our eligible participants includes any copy traders who would copy trade on our mini program by up until June 6th. So if you would like to try out our copy trading platform, then you can do so before June 6th to be eligible for our $3,000 lucky draw. Okay, so now let's proceed to a few copy trading tips and tricks. So copy trading is not, for sure, it's not like the answer to all of your investment problems. It does not ensure that you will be profitable 100% of the time, or that it will basically make you a millionaire, right? So I will be sharing with you a few tips or on how to get started when it comes to copy trading, as well as the usual mistakes that we need to avoid when we copy trade or copy a portfolio. Okay, so I think the most important one is choosing the right portfolio. So just like what I mentioned before, not every portfolio will fit every copier. So it actually depends on a few factors that you may need to consider. So the first one is most likely your investment goals. So what are you looking for if you would like to copy trade? Are you looking for quick and fast returns? Do you just plan to copy trade in the short term, or are you here for the long term? So, or would you like to just invest your money, leave it there for a while, and then come back to see if it was profitable? So So determining your investment goals will also determine which portfolio is the right type for you. And the next one is your risk appetite. So different types of traders have different risk appetites. So some traders are more aggressive, some are more conservative in terms of their strategies. So it may not meet your risk appetite if you are more conservative or more aggressive. So it's best to also take a look at these things, take a look at this information before choosing the right portfolio for you. The next one is it's important as well to review the lead traders' statistics and numbers in their portfolio. So if you take a look at the right side, so some of the information that you can take a look at would be their ROI for sure, their P&L. But at the same time, it's also important to look at their MDD, or what we call maximum drawdown. So it basically shows the highest amount of loss that the trader had in this portfolio. So the higher the MDD, most likely the higher the risk, or the more aggressive the trader is in terms of his strategies. Another is you can also take a look at the runtime of this portfolio. So has this portfolio been running for the past? Has this portfolio been open for quite a long time? Is it a new portfolio? Are you able? Is the portfolio, basically the strategy of the portfolio, more or less consistent already by this time? So that's something to take a look at as well. Is copying the portfolio with the highest ROI the best? So, like I mentioned, it may not apply to everyone for sure. So it will definitely depend on your preferred goals, on your investment goals, and your risk appetite. Okay, so that's one thing. The next is diversification. So I'm sure you guys have heard the saying before that it's not a good idea to put all of your eggs in one basket. So I guess it's similar to investing or trading as well. So just like what Jimmy mentioned, so it's best to take a look at a lot of resources, consider going through different indicators, going through different information, and all of that. And it's also the same way when it comes to copy trading. So with copy trading, maybe there are strategies that will work for a bull market, or strategies that will work for a bear market. But for sure, there is no one portfolio that will work for all of the market scenarios. So of course, if you have the capability, or if you would like to diversify, then it's also definitely possible. So the traders have different types of strategies that you can take a look from, and you can also choose which ones would work best for you as well. Okay. Next is what I mentioned, look at the portfolio details. So aside from the details I mentioned a while ago, ROI, PNL, and maximum drawdown, the portfolio of our traders also shows their trading volume and their symbol preference. So why is this important? So for one, trading volume is important, especially if you are choosing how much amount you would like to copy or deposit into that portfolio. So why? Because if the trader trades quite frequently or trades quite high volumes, and you are planning to invest, let's say 100 USDT, and the trader is maybe trading with a large amount, the chances are there may be quite a few trades that may not be open on your side because it does not meet the minimum amount. So if that's the case, you may see a discrepancy in terms of the trader's ROI and your ROI. So that is also something to take a look at. The next is symbol preference. So what does that say? So it basically says what type of coins or trading pairs you're interested in having exposure with. So some of you may only want to have exposure or to invest in, let's say, large cap coins or more stable type of trading pairs. However, some of you may be more aggressive. You'd like to have investments in altcoins or even riskier coins. So, which is why you need to also take a look at their symbol preference to see if it matches what type of strategy you're looking for. Okay. Also, it's very important. It's to manage your risk. So on TraderWagon, as much as we would like that our copy traders will not do anything and just like give their funds to our lead traders, of course, we would want to make sure that we mitigate or manage the risks of our copy traders. And we provide that by, for one, we always encourage our users to deposit or copy a portfolio with an amount that they're comfortable with. So of course, we would not encourage everyone to risk their life savings to copy one portfolio, and we would only encourage you to basically invest or deposit the amount that you're willing to lose for that type of investment, because as like what I mentioned, all types of investment carries risk. Okay, and the next one is to set your stop loss. So although the lead trader will have his or her own stop loss, it may differ from your own preference for your stop loss. Maybe you're not willing to lose 80% of your portfolio before the portfolio closes. Maybe you are more conservative and you're only willing to lose 20% and you want to cut your losses by that time. So that's why it will depend on you, and we're giving you the option to set your stop loss depending on your preference. Okay. And lastly is to monitor the progress of your copy. So copy trading is more or less does not require as much effort, definitely, when it comes to trading. So since a lot of the trading activities will be done by the lead trader. However, we still require or encourage our copyers to do their due diligence by monitoring the progress of their copy trade. So why is this important? So it's important because maybe for now, your interests or your strategies are aligned with the lead trader's strategies. However, in the long run, maybe the lead trader's strategy may change. Maybe his portfolio will become more aggressive, more conservative, or he may trade less, may trade more, and maybe this may not align with your goals, your trading goals already. So from time to time, we encourage you to take a look at the progress of your copy trade to see if the interests of your lead trader are still aligned with your own interests as well. So that is one thing. That is one thing to take a note of also. Okay. So yeah, so those are actually quite a few tips on how to get started with copy trading. So definitely it's much simpler, I would say, compared to trading by yourself. But there are also things that you need to take a note of. It's also important to make your own effort and research in terms of choosing the right portfolio and deciding what type of trader you're looking for as well. Okay, so we also, for those who are actually experienced traders out there, and maybe if you are interested in having your strategies or techniques copied, or if you would like to share your strategies with others, so definitely you can also join us as a lead trader as well. So how do you become a lead trader? So it's actually very easy. It's only 3 simple steps. So all you have to do is send us your application through TraderWagon.com, create your portfolio, and trade actively. So that's pretty much it. So it's actually a very simple process. And our lead traders on the platform get quite attractive benefits, I would say. So the first one, I also saw it in the comments, would be the 10% profit share from your copy traders' total profits. So it means that if your copy traders are profitable, you get to keep 10% of those profits from as a part of your benefit. So one question I saw is that if the lead trader is losing, would the copy trader still be required to shell out 10% from his or her funds? So that is not the case. So actually, you don't need to. So the copy trader will only share 10% if the lead trader is profitable. So that actually also ensures that the interests of the lead trader and copy trader are more or less aligned. Okay. In addition, we are also providing our lead traders 10% commission from copy traders' fees. So this one is not from the pockets of our copy traders, but it's from TraderWagon's own pocket. So this is one of the benefit that we're providing our lead traders. So we've actually added this benefit because we wanted to provide our lead traders with a little bit more security in terms of their benefits. So because we noticed that not all the time our lead traders will be profitable for sure. So even the best of us can make trading mistakes. Maybe sometimes the market is not in our favor and maybe we're not profitable for that month. However, our lead traders are still able to get commission from their copy traders' fees as long as they continuously or actively trade on the platform. Lastly, we're also providing our lead traders with 50% rebate or on their trading fees for the first month as well as an additional incentive. Okay. So next, just a bit more information on lead traders. Okay, so the minimum deposit for our lead traders is 500 USDT. So some traders have actually asked us as to why they are required to shell out funds or deposit funds into TraderWagon to be in order to be copied by others. So on our end, it's to ensure that we're able to protect our copy traders. So because lead traders with more stake, or if they have more stake into trading, most likely they will be more careful when it comes to trading or handling the funds of their copiers as well. They will be more careful when it comes to making trading decisions, which is also in line with the copy traders' interests. Also, so our lead traders can definitely trade all of the perpetual futures contracts that are available on Binance Futures, and all of the order types are available as well. So recently, we've also added the API trading. So that means that if you are a trader who trades using algorithms, using programs, using bot trading, I would say. So you're free. You're also welcome to join TraderWagon as a lead trader. Share your strategies, execute your strategies on the platform for our users to copy as well. And lastly, if you are more inclined to trade using mobile app, we have actually released a light version of our mobile app for our lead traders. So feel free to check it out. So it's definitely available on Google Play and the App Store also. Okay. So how do you set up your TraderWagon account, or how do you trade using the mini app light app version? So it's actually two steps. So the first one is to go to the traderwagon.com website. So on the web version first. So you will need to create your portfolio and generate your API key on the web before you move to downloading the app and entering your API key and secret key. So once the API keys are already entered, then you will be able to trade futures directly using your mobile application. Okay, so if you think that maybe copy trading is not for you, however, if you think that maybe you have friends, or you have a community that may be interested or that may benefit from uh, copy trading different types of traders, then you can share TraderWagon to others as well. So we have a referral program that we offer to all of our users, and if you are a larger influencer with a large community, or if you have your own social media channel, then we can definitely offer you more with the larger benefits. So if you are interested, you can join our affiliate program. You can go to traderwagon.com, go to the bonus section, and click on the affiliate program as well. Okay. Yeah, so TraderWagon has actually come quite a long way since starting not so long ago, just a few months ago, actually. So we're very proud to share that on the product side, we've released quite a lot of features that our lead traders and copy traders are asking for, such as API trading. We've made sure that all of the contracts are available, all of the order types are available. Our community is growing as well, so feel free to join our Telegram community and Twitter community. So we have lead traders that are very active in sharing their strategies in our Telegram group. So if you would like to learn more about how to trade futures, how these lead traders create their strategies or manage their strategies, feel free to join our Telegram group and ask questions. Also, for our programs, we've made sure that we continuously increase and provide our users with more and more benefits. So we've increased, or we've upgraded our lead trader benefits, created a referral and affiliate program, and just recently, which what I mentioned, we've also released our mini program and a light app for our lead traders. So definitely, we are very much open to what type of features you would like to have in a copy trading platform. So feel free to try out TraderWagon, check out the features available. If you have any suggestions, we would love to hear from you. Feel free to send it to our Telegram group, no problem. Or you can send us an email at the cs@traderwagon.com. Okay. So yeah, so thank you so much for joining, everyone. Before we go, let me check if we have any questions. Okay, I think I may have missed a lot of the questions. Okay, no worries. So if you do have any questions about TraderWagon, feel free to send in the comments or send us a message through our Telegram group. Okay, so before we end this session, let's have our second round of lucky draw. So all you have to do this time is leave a message saying TraderWagon copy trading here on the comments on Binance Live. So yeah, so it's pretty much easier. We will be giving away 10 USDT to 25 different winners. So feel free to leave a comment, and we will be announcing our winners in the next 5 days as well. Okay. Thank you so much for joining, everyone. If you have any questions, if you would like to know more about copy trading, if you would like us to have another session, feel free to leave us a comment, join our Telegram group, and we will be happy to answer all of your questions about copy trading for you. Okay? Thank you so much for joining, everybody. Have a nice rest of the day. Probably see you next time. Bye.